So I work with hedge funds, I work with long-short companies, I work with investment managers, I work with sort of big investment bank type businesses to help them understand the investment markets better. So a couple of names would be Raymond James, a big American investment bank, not so big here in the UK, but building in Europe. I do some strategy work and help them understand things like asset allocation better. Then in the wealth management space, people like Tilney, trying to help them improve their understanding of international investments outside of the UK. And then, of course, we have this fund that I'm just about to launch in association with Daniel Stewart and also a group in the Far East called Quam. And that is actually looking to access the best companies in the best sectors, in the best markets in the world. A global stock-picking fund which draws on all of my experiences, all of my contact bases, all of my knowledge, and tries to package it up for the ordinary investor. The fund is launching, hopefully, in next week. We've got everything lined up, seed money, everything's ready to go. It's just a question of us pressing the button. So we're going to press it, so it will launch by mid-September, and then we're going to look to try and grow that over the next 5+ years. This is a long-term project for us. But as I say, trying to find the best companies in the best sectors in the best markets, looking for the best stocks in the world, we think this is something which is attractive to the average private investor. It's something a bit different. It's not something which you're going to get off the shelf from one of those big investment management companies trying to sell you something very process-driven. This is stock picking based on my experience, some of the benefit from my partners, Daniel Stewart and Quam, but also it's something which we feel suits today. Because today's world is mixed up, it's horrible, it's uncertain, geopolitics is everywhere, central banks, what are they doing, governments, do they really know anything? Companies, though, they sort of move between all these areas, and they are your sources of potential profit and return. So what we're trying to do, find the best companies and invest only in them. The opportunity set is huge today. Huge, because the world is becoming less correlated. That means things aren't moving together as much as they used to. Look, after the global financial crisis, central banks decided to do all of this clever stimulus stuff, which was great. It saved the world. But it meant that everything that was risky suddenly got lumped into one pot, and you couldn't differentiate between your investments. So if you're a stock picker, frankly, it was a tough ask. You're better off buying a passive fund, all boring stuff. That world is changing, and that's what's attracted me back. The other thing is, information is exploding, and the ability of somebody with a bit of experience, or obsession maybe with investments and related matter, to open up the world actually is improving, because there's actually too much information. So interpretation becomes more and more important. And really what our fund is trying to do is interpret all of that information in a way which is attractive to really any investor, but anyone wanting to access the best global opportunities out there. That's why I came back. It's always opportunity. And I feel the opportunity to make money, particularly if the markets are somewhat uncertain, actually is much better and more interesting than it was a few years back. UK is fascinating at the moment because the fears over Brexit and related are huge. And so consequently, anything that I would call domestic UK, that's anything which sort of pertains a bit more to the UK consumer, actually typically is quite cheap at the moment. Be it retail, be it banks, they're all quite interesting at this moment in time. People hate them, but that means they're actually quite interesting. By contrast, some of the loved up areas, let's say on a global basis, technology, we know it changes and evolves our lives, but some of the valuations there today are pretty full and pretty firm. So I think, you will get an opportunity to get back in. They are still interesting businesses, but tactically at this moment in time, I'm finding better value in something which is well run on the UK high street than I am something which is excitable in Silicon Valley. That's where the relative value is. I think the pound is cheap. I think the pound will go up. I think some of the Brexit fears are overdone. So anything which does better when the pound goes up, and that typically is anything which is UK consumer-led, rather than something which benefits from exporting from a cheap pound, I think is interesting. So lots of opportunity in the UK market, but also the UK versus the rest of the world. Lots of what I would call arbitrage opportunities. Pricing is all over the place. Europe is interesting. Europe is changing. I think Macron is changing France, and consequently that makes Europe interesting. China, the Chinese are doing a fantastic job in evolving and changing their economy. They've got a National People's Congress coming up. They know how to change and evolve. There are issues over there and challenges and problems, but there's opportunity too. You can't have that amount of money switching over to consumer spending for that not to spill over in some way. I think commodities are quite cheap. Oil looks undervalued to me, and consequently the energy sector looks a pretty good risk reward here. So there are lots of things to do. So oil and gas price has been in a pretty tight range over the last few months. The reality is, though, there's not enough investment going into the oil and gas sector by big companies or small companies to sustain that level of supply of oil. And as a consequence, that supply-demand balance is going to get tight. And that only means one thing: oil price goes up. And that's even without any geopolitical whatevers, which are obviously impossible to predict. Bottom line is, I think oil price will be $60-something next year, and that's good for the sector if you're an investor. 3 big tips. Number 1 is understand the finances of your company, of the company you're thinking of investing in. The big reason most companies go wrong or are duds is because they run out of cash. So understand their financial position. Is it reasonable and prudent or not? The ideal is they've got a year or two's worth of cash if they're prospecting for oil to allow them to see if it works out or not. That's the first thing. The second thing is, do you trust the management? It's a people business and the management are important. Are they credible? Do they live up to their promises? Do they look you in the eye and you believe them? Etc., etc. Do your homework on that basis. Do you like the management? Do you trust the management? That's really important. Third aspect, does it make sense? I mean, I'm saying this from the perspective of, look, if you're looking for oil and gas in some far-flung country or region where no one's ever done it before, it's rolling a dice. It's no better than that, and you've got to treat it appropriately in your portfolio. By contrast, if they're looking in an area of the country or the world where there are other people successfully producing oil, they just happen to have some acreage which they're exploring and looking at, maybe that's of a little bit less risk at a big picture level. If you understand those aspects, then you'll avoid some of the horrors and hopefully make a bit of money.